folks, another week, another dang earnings. We love talking about earnings. It's all we do here, okay? Every week. We're winding down a little bit in terms of earnings season, so keep that in mind. Not quite as many this week, and we'll get lesser as we go on, but there's still some very good companies to take a look at here. I'm very excited, and I hope you are too. I have 2 focus stocks for the week. I'm sure you can tell which one those are, but yeah. Let's just roll right into it. Get started with Monday. Before open, Li Auto. Obviously a very, very hyped stock right now when we talk about the Chinese electric vehicle market. Li Auto, it comes to mind when you think about them. Stock's been doing super well lately, so they're expected to increase deliveries by quite a large number year over year, so we'll see if they're able to accomplish that and keep the stock rising. Well, it's been hit pretty hard lately, let's be honest here. Acoustis, don't know what you are. Catalent, we have Cloudera as well. Cloudera, obviously the focus here is going to be on the acquisition, not necessarily by them, but the fact that they are going to be acquired, barring any issues that come with regulation. But they'll probably talk about that. Still expect good things out of this company. So they're supposed to be acquired at $16 a share. We'll see what that looks like for them, if that's still on the cards, or in the cards really. And if that is, then could be good for them. Anyone know what this picture of a turnip is? I don't know. I don't read kanji, so it's something I need to know. I don't know. After close, we have a focus stock. Of course it is. It's Zoom. So Zoom, personally, as a stock, has been facing some hardships. I can't lie to you. Last year, only up 13.8%. But if you look in the past 5 years from their really peak, they're down around 40%. Now, again, I think things did skyrocket a little bit too much for them. So there's a reason why they saw a dip. So we'll see what they're expected and see what that looks like for them. So this is a company that's expected an EPS line of $1.16 compared to 92 cents of a year ago. So that's progress. So it's good to see that. Again, this has the potential to be a very high margin business and really should be. So they should be able to bring up a good earnings number as they progress into the future. Now, as far as revenue, Yahoo Finance needs to quit joking at me with these NAs. Let's tell you right now, it looks seamless. I edited the website myself, okay? Sometimes you got to get into the source code and you got to edit the website because I didn't want to have to keep flipping back and forth between too many things. So I edited it right there. Don't ask why I didn't do the sales growth. Maybe I didn't want to calculate it, okay? Maybe I didn't, because I didn't. So anyways, we're expected a growth right around 30%. That's why you don't need to do the calculation, because when you got a brain like me and it's 33%, you got a brain like me. I mean, it's just something about me. It's all in here. I'm going 32.3% growth. So still expected very high growth, and on the year expected to grow 50%. This is a company that should be facing tough comparables. Obviously, last year they were showing growth in the triple-digit variety, so they're not going to hit that this year. And I don't know what that means for the stock, if that's going to stop people from necessarily, if it's going to stop Wall Street from wanting to be involved in it. I don't know. It's very hard to say because they could. Obviously, last earnings, they beat expectations by over $100 million by a significant margin, so we'll see what that looks like if they're able to post $1 billion number. I don't know. It needs to be considered that Zoom is the way of the future for a lot of companies. Regardless of whether people are working from home or not, Zoom it's going to be a big part of the future for companies in terms of meetings. So instead of maybe just conference calls via phone call, emails, people are going to be doing a lot of Zoom meetings now, okay? It's a lot easier to set up. You don't need to get all people into a certain room. You can just do it from wherever. You can be in your boxers and do a Zoom meeting. So Zoom is obviously a great thing in the future. And you talk about schooling, online schooling, Zoom. You talk about work from home, Zoom, which work from home is not going away anytime soon. Maybe they're going to reduce it, but a lot of companies are still going to be offering work from home positions consistently into the future. So that's Zoom for you. Expect good things out of them, really. It just depends on what those growth rates look like, if it's able to sustain where the stock's at. Because, again, you talk about the stock still with a market cap over $100 billion, yet on the full year expected $4 billion. It's quite steep still, so keep that in mind. We have Stone Company. I love Stone. Nordson, Renesola, and Azure Power. Obviously, solar power. They're reporting after open or after close Monday. They really want to. Tuesday before open, Futu, NetEase, a lot of Chinese companies. Obviously, as we get later into earnings, you'll see a lot more of these Chinese companies. So next week, probably a lot more even too. So keep that into consideration. Designer Brand and Chico's. These are clothing companies, to my knowledge. So we've seen great numbers from them last week or 2 weeks ago, with the majority of the clothing retailers reporting. So, I expect pretty decent things coming out of them, all things considered, just because of easy comparables due to last year. Burning Rock. Okay, that's fun. American Woodmark. Youdao. I love it. Leju. These are great companies here. Not one that dabbles too much into the Chinese stocks, so I don't know a lot of these companies. I can't lie to you. IMAB, Biopharma. There you go. After close, another great one that a lot of people will be focused on is Crowdstrike. When you're talking about cybersecurity, obviously, big focus right now. Globally, we've had talks that Microsoft plans to spend $5 billion on cybersecurity over the next 5 years. So again, cybersecurity is a key aspect for a lot of companies, and CrowdStrike obviously provides that solution for a lot of people. So really excited to see CrowdStrike, and obviously the number for them is going to be on subscription, annualized recurring revenue. That's going to be the main focus for CrowdStrike. It's what a lot of people look at because subscriptions are king in the market right now. PVH, Anaplan, Ambarella. Anytime you talk about these chip companies, it obviously comes into consideration what it looks like in terms of the overall marketplace for these chip stocks. Supply chain's been disrupted quite a bit. Production is an issue, shortage. We'll see what it looks like for them. Not sure what to say necessarily because, again, we hear negatives and positives. Every single day you'll hear conflicting things. Like some companies say, "Oh, we're back on production," and then the next day they're going to say, "Actually, it looks like not happening." So we don't know. It's interesting to see. So Caleres, NYXOA, and Connect. Before open on Wednesday, we've got obviously your most boring consumer staple stock of all time in Campbell's Soup. Does anyone care about these numbers usually? Regardless of what they report for earnings, the stock is just going to stay stagnant. We all know this to be true. There's two things, really three things, that are expected in life. Death taxes and Campbell's stock staying exactly where it's at, growing 1% each year. That's a joke. I'm sorry. That's rude of me. And I just want you to forgive me. Please do. Cons. Vera Bradley. Anyone know what these weird symbols are? There's a typhoon symbol for some reason, all of a sudden. Dicom and Brown Forman. After close, we have another focus stock in Chewy. Chewy, obviously, great company. They supply dog and, well, not just dog, pet products to people via the internet, right? They ship it directly to your house. You can do it in a subscription form where every single month you get the same exact items. It's great. It's great stuff. If you need dog food, pet meds, whatever it could be, Chewy's got you handled. If you look over the last year, it's been incredible performance here, 47.5% up. In the last 5 years, up 151%. Really good. But again, it is down from its highs that it saw back in February of last year, down around 25%. Or February of this year, I should say. And again, a lot of this reaction was positive from 2020. From outbreak of the stock market really crapping, it was up 355%. And again, that's mostly because of the fact that this is an online company, and online companies were seeing massive success in the market last year. You saw it with Zoom as well. they're expected to put up an EPS line of -2 cents compared to -8 of a year ago, and actually be profitable this year for the first time in their history, which would be incredible if they could do it. So we'll see what they could do. Obviously, with these e-commerce plays, margin isn't necessarily as easy because typically they'll offer you at a lower price just to keep you interested. And it really impacts their margin, all things considered, when you consider the shipping cost as well, because a lot of these places offer free shipping, whether it be if you buy this certain dollar amount, but it impacts their bottom line, all things considered. So they are anticipated earnings revenue to come in at $2.2 billion compared to $1.69 a year ago. 30% growth is pretty nice for them. Great growing company. And you look at the stock still valued at $36 billion isn't incredibly expensive when you see they're going to bring in $9.19 billion this year. Supposedly in revenue if all things go to plan. And the fact that year to date it's down slightly and down 15% in the last 6 months makes this an interesting play for me. Certainly a stock I want to keep my eyes on. Not one I'm necessarily... I'd say I'd consider call options on this one for sure. I don't typically like to mess with short-term call options unless you're me with Tattooed Chef and you just made a lot of money off of those options. But that's okay. Not everyone has the brass cojones that I do. So we'll see what they're able to do here. If they're able to keep growth rate looking good, and let's say post that number closer to $2.4 billion, I think the stock could go up quite a bit because I think the valuation is still getting a little cheaper actually on it. Now profitability is going to be the concern after that, but yeah, let's consider that. ChargePoint, C3.ai, that's fun stuff. Smith & Wesson. It's really hard to say on a company like Smith & Wesson right now because people are still going crazy. Have you ever gone into a store and tried to buy ammo lately? Well, if you did, you're not going to get any. It's gone. There's no ammo to buy. What's going on here? I want to buy ammo, and the only thing I found on the shelf was some 12-gauge shells. I don't want no 12-gauge. Get out of here. Just kidding. I do, but it was actually, no, it was 20-gauge. Sorry, definitely don't want the 20-gauge. I'll take the 12-gauge, but yeah, I mean, you can't even get ammo right now. Firearms, same thing. People are still going crazy. I don't know what's going on, man. People are wild. Okta. Five Below, another retailer. It's great stuff. Similar to what you saw with the dollar stores, I expect good things. Five Below is a dollar store, but $5 store, I guess. I mean, they actually have some pretty darn good deals in there. If you've ever been in, it's like, think about a dollar store, but a little higher quality. That's them. Viva, Asana, Nutanix, and Semtech. Thursday before open, we've got American Eagle, more clothing. Again, great comps are going to be had here. We'll see what the stock does as a result, but it's going to be easy comps for them at least. So, Signet, Sienna's a great company, obviously, too, that I made a lot of money on when I started investing, but I haven't really followed the stock since then. So, still, I've seen good numbers out of them, but we'll see what that means for them. Mastercraft Boat Holdings. I don't know necessarily if a lot of people are buying boats right now, but I know as far as the industry, we've seen issues in terms of manufacturing. What a shocker. In all of these large vehicles, whether it be RVs or boats, we're seeing delays of up to 6 months on people ordering. People are ordering like crazy too. They're wanting to buy a lot of this crap, but they just don't have the people to manufacture them necessarily in time, so they're having wait periods of 6 months to a year right now, which might throw people off. We'll see what that looks like though. Toro with red, I get it. It's funny because it's bulls, and you say Toro with the red cape. I get it. Donaldson, Lands End, Hormel Foods. Hormel Foods, they make some disgusting garbage that's processed so disgustingly, but they also make some quality food, okay? They do. But a lot of the stuff it's gross. I mean, we're talking about it's MRE quality. Okay, I'm not going to diss all MREs because some actually are pretty goated, but Hormel, it's very low quality, but cheap food, and it stays good for years and years. Duluth Trading. Never tried the bare naked underwear, but I do want to know what it feels like. Really, I would just go commando if I wanted to know what it felt like, but who knows? After close, we have Docusign, a company that is pretty important actually, given the future of all things business, because we see a lot more companies turning to the service because of the fact that it can let you sign stuff digitally, right? Instead of having to have a physical signature with people, you can get them to sign a document digitally and have that on record that way. So one thing you need to consider, Docusign, great for the future of business for sure, as we move less to physical document retention and more on data retention with digital documents. So Broadcom after them, another chip company, really going to be important for us to see what the overall market looks like for chippies. HPE, Hewlett Packard. We saw the HPQ segment of them. Saw a miss in terms of revenue. What does that mean for Hewlett Packard Enterprise? I don't know, but that's what we saw. So the spinoff did on earnings. So Cooper companies. MongoDB, great company here. Oxford, I love Oxford, man. Oxford Industries, great stuff. PagerDuty, Tilly's, SAIC, and Charles and Colvard. That's what I got for you today. I hope you had a great day and you have a consistently good day and a great weekend. And you're awesome.